I mean, we have people expecting a reading as low as 0.1 or 0.2%, and we have people expecting a reading of as high as 1.4%. Most of the time the consensus are very, very similar, but in this case they're very, very much split, which in my opinion that means that we may very much see it's a very, I mean, first of all, the Australian retail sales have been doing extremely well in the last few months, and basically when we have very bullish retail sales, like for example last month in March we had 1.1%, and this month for April we have expectation of 0.5%. Usually it's very difficult to see very solid readings of like over 1% several months in a row, though it's been happening in the Australian economy in the last few months with retail sales. Usually when, because it's a month-over-month reading, which basically means that the retail sales for this month, for April, have to be compared to March, and whatever reading you see, it means that it had to meet the pace it was being in March, and actually overdo that in order to see, in order to have a positive reading. So bottom line is, I think I'm confusing too many people probably with what I'm saying right now, because I'm even confusing myself. So anyway, bottom line is a consensus at 0.5%. In my opinion, if the retail sales come out at deviating by 0.3%, an actual reading of 0.8% or higher, it would be a very bullish reading, and I think Aussie USD may possibly go up by about 30 pips or more. On the other hand, if we see a reading of 0.2% or lower, that would be the lowest reading in about a year, and I think Aussie USD may decrease by about 30 pips or more. On the other hand, with the conservative 20 pips limit triggers I have here, if the deviation is at plus 0.6, which would magically put the number at 1.1%, which would match the highest reading in a while, like we had last month, and to have such strong reading second month in a row would be extremely, extremely bullish. And on the downside, minus 0.6 would put the reading negative at negative 0.1%, and of course negative reading would be very hard psychologically, and I think it will drive the Australian dollar down. Now, despite this, even if there is a very big deviation of 0.6% or more, we really have to stay extremely realistic, because Australian dollar is a very anemic pair. It has a very low range. It has twice smaller range than GBP USD generally, and I mean 30-35 pips may even be the maximum for a very huge deviation. I mean, we may shoot for 40-45 pips, but it's not the kind of pair that's going to give you 70-100 pip move on very, very strong number like the pound can. So we definitely have to keep it real on our take profits, and even the deviation is extremely crazy. Even if the deviation is extremely crazy, we may not see a much bigger move than if the deviation is less crazy, is more moderate. So other than that, other than the timing in the economy, if you remember, the Australian dollar looked very, very bullish because there were a lot of speculation that the Australian government will raise interest rates. Well, what happened in the beginning of this month in May, when they had a meeting about Australian inflation, Glenn Stevens, who is the head of Reserve Bank of Australia, basically said that the inflation is being tamed, so to speak. The inflation has been within the 2 to 3% mark, which is the perfect range that the Australia is shooting for, and he basically said that they're not planning to hike any more rates until more data is released. So he's just saying that the inflation is within the bank's target for now, and because of that, they have plenty of time to look at what the economy is doing and when the reports are coming up, and make appropriate decisions in their policies, meaning that if they want to hike or whatever, they have plenty of time to do that, and they're in no rush to do that. And whatever data we've had so far is not enough for them to hike yet. So basically, they'll be looking at the second quarter data, and April obviously is the first month of the second quarter, which is pretty important. And by speculation, these retail sales may matter, because obviously as retail sales go up, as retail sales become more and more bullish, it would probably increase the speculation of retail sales coming out more bullish, and it would increase the speculation of consumer price index coming out more bullish, and inflation to go up with it, and they may have to basically hike some rates later this year. And also, some of you may have known, especially people in Australia that are in this room, people from Australia. Australia did a major, I don't know how major it is, but I think something like $40 billion Australian dollar tax cut for Australian citizens. So people have to pay less tax now in Australia, and because of that, the consumer confidence has really surged on the back of that announcement. But they announced that in May, and these are retail sales for April, so that particular confidence and spending probably hasn't spilled into April, because it wasn't there yet. I'm not sure, maybe they discussed that at that time and that has somehow spilled, but we'll see more of that in the May's retail sales next month. We should see relatively more bullish retail sales because of this tax cuts. But other than that, yeah, the Australian dollar is looking bullish. 15 seconds, 10 seconds, 5 seconds,
sell.
Okay, came out at 0.1. I got filled at 81.81 on MB trading. Construction work done came out better than expected. I would say an after spike at 81.85 if you have such capability to sell at 81.85 or so. Put in a limit order. Yeah, it never quite got there. Again, it came out at 0.1% versus 0.5% expected, and the prior number was revised from 1.1% to 1%. So far we've seen a move of about 23 pips or so. I just want to see, usually we should see most of the move in the first 10 minutes or so, and then we'll just see consolidation period. So I'm just gonna hold on for a little while there.